Thanks for coming, everybody. It's great to see a full house. I don't know about you, but I've had my fill of Zoom-based conferences, so it's nice to see everyone in the flesh. So this is a panel about the current crypto regulatory landscape. I suggest we start with some brief intros from each of the panels, and then we can dive in with some questions and thoughts. Sendi, would you like to start?
Sure, happy to start. Hi everyone, great to be here, live event. I think we all missed it. So I'm the Managing Director for Europe for Ripple, where I have responsibility for overall strategy and growth of the business right here. Previously, I'm coming from 5 years of MasterCard in a variety of leadership roles, driving the data and services business and over a decade of consulting and financial services experience.
Blair.
Great. Hi everyone. Blair Halliday, so I'm the head of UK at Gemini. For those that aren't familiar, Gemini is a crypto exchange and custodian founded out of the US by Tyler and Cameron Winklevoss. We just announced our 6 years anniversary last week, and we've been live in the UK for about a year, which is, we're delighted to be here. We're one of the very few FCA approved crypto asset companies. So we got our Willy Wonka's golden ticket about a year or so ago. Prior to that, my background is in a variety of different industries, so banking, payments, FX, and now into the weird and wonderful world of crypto. So nice to be here.
Great. Mary Beth Buchanan, last but not least. It is great to be here with you. I'm the president of Merkle Science Americas and also the chief global legal officer. This company was formed in 2018. We're in Bangalore, Singapore, here in London, and now in New York City, and expanding hopefully to the West Coast soon. The company is a blockchain analytics company that offers 4 different products to make sure that all of you and your companies, whether you're traditional crypto or financial services, can keep compliant with whichever regulator that happens to oversee your operations over the globe. I've also been GC at Kraken and at Bitstamp, and got into the space in 2013 representing companies in a private law firm, and before that with the US Justice Department for 20 years.
Great. I'll mention who I am too. I forgot to mention that, didn't I? I'm Oliver Tonkin. I'm the co-founder and general counsel of BCB Group, who are, I think I can say, the Europe's largest payment services provider for the crypto and blockchain industry. So that is us. So let's dive in and start off with a general kind of thought piece from everybody about where are we in the crypto regulatory landscape? UK, US, EU, rest of the world. What do you think about where we are right now? Yeah. Sendi, would you like to start?
Sure, happy to. It's quite interesting, right? There's a huge variety of approaches around how the regulations happening in this space at the moment. You have kind of the extremes of the China, right, straight out bans, and you have, on the other extreme, the, El Salvador's, right, making Bitcoin legal tender, and looks like Brazil, Panama, etc. is following suit. Then you have the sort of more, let's say, US approach of like kind of regulation by enforcement, which obviously has been a issue of news coming out in that space. And then the other group that I would kind of classify as kind of the more thoughtful regulation, more progressive, which is where we see, for example, I would say Japan, Singapore, and UK and EU with MiCA coming up. I would classify the same way, which is all about creating a framework that is bringing transparency, clarity, a common sort of definition taxonomy around the digital assets. And I think that's really important to allow innovation to really flourish while still protecting consumers. So it's a broad, I think, diversity, but I think what is really important is I think the jurisdictions, the countries where we see this sort of more progressive approach, I think they're going to go way further, whereas in other places it's going to really stifle innovation and I think we might move some of the industry moving in those jurisdictions where it's a lot more progressive.
Great. And Blair, you mentioned that Gemini was lucky enough to have one of the golden tickets from the FCA. Well done. I mean, how do you think the kind of UK are perceived as a sort of crypto regulatory?
Yeah, look, I think in terms of the UK, and this is kind of somewhat across the EU as well, I think, certainly the landscape here is indicative of the emerging kind of crypto landscape in general, and crypto firms in general. And by that I kind of mean, look, crypto legislation is definitely focused on the AML, financial crime side of things. So we have the Fifth Money Laundering Directive, which is the barometer at which that the FCA and other regulators across the EU are allowing firms to be registered. And so, as I say, we're one of the, I think, 10, 12, whatever it is, firms that have got through the FCA's quite stringent process, and we know that is a more broader process than just literally looking at AML. It's probably more, for lack of a better word, kind of e-money institution license light. And so with that kind of in mind, they're looking at it from an AML perspective. But for crypto firms, because we're, from a Gemini perspective, we're also, we're allowing onboarding and on-ramping and off-ramping with fiat. It also means that we're also part of the e-money institution license process. So I think what it kind of, people kind of look at it from the perspective of crypto isn't regulated or blah, 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 but actually crypto is kind of looked after from an AML perspective, but there are so many other constituent parts that a firm that wants to do business in certain kind of product sets, they have to seek other sorts of regulations. So, as I say, for us, we have on-ramping and off-ramping, so the holding of fiat. So that means that we kind of fall into that EMI process as well. And likewise, other firms have gone down a multilateral trading facility process as well. So I think, as the whole landscape kind of develops, it's going to be interesting to see how the legislation comes to kind of encapsulate all of those different areas. And I know we've got MiCA coming down the road for the European entities, and we'll have probably an equivalent for the UK as well. That'll kind of look more on the side of bringing it all in under one umbrella. But at the moment, we have a very, it might look like the firms are only being looked after from a 5MLD perspective, but actually there's a whole bunch of different other bits of regulation that they have to consider as part of their process.
Yeah, excellent. I mean, Mary Beth, you've got a wealth of experience, globally. I mean, how are you seeing, the landscape from?
So I remember being on a panel in 2014 around this time of year in New York City, and nobody on the panel could agree. What is it? Is it property? Is it income? Is it commodity? Security? And I think we've come a bit past that in the U.S., but we still don't have the clear regulation that you have in other parts of the world. What really brought me into this, to stay in the space, I represented a company at around that time, 2014, 2015, that was almost put out of business by a U.S. regulator. And they were almost put out of business because they were not registered, even though under the law they didn't have to register. And this particular agency wanted to fit them into one of their boxes, but they didn't fit. And the agency basically just said, we'll sign this consent order or else. And so I spent the better part of a year educating the agency, educating the Senate committee that oversaw the regulator, and really just letting them know that we were not going to simply, fold up the tents and go away, and that if they wanted to litigate, we would. And I recognized that what we needed was a lot more clarity for our regulations in the U.S. And unfortunately, I think maybe it's fortunate for the rest of the world that other countries have looked at this in a more holistic manner, and they have created regulatory frameworks that really look at what is the asset, what are you doing with the asset, how do we clarify, how do we classify this, and then set some pretty clear regulations. And I think the way they've been able to do that is, as Sendi said, in places like Singapore, in Abu Dhabi, even in Japan to a certain extent, they sought input from the community. And they put out some draft regulations and they asked people to comment on it. And I think they came up with a lot better products, because when you put industry together with regulators and it's an open conversation, you can try to avoid those unintended consequences. So I agree with, I think, what's been said. There are different approaches, in different parts of the world, and those that have a singular regulator seem to be doing a better job at this point. And in the U.S., we still have a bit of a jump ball, I guess, with regard to who's going to have the greater authority over regulating individual types of cryptocurrency.
Let's come back to that in the second question. But I mean, I'm really interested to hear the panel's views about kind of where we're going. So I mean, one of the critiques about the European system is that you've obviously got all the EU member states and the UK have implemented now, I think, AMLD5, but different states have taken a different approach. Some have set a much higher bar than others. So you've got sort of clusters of firms in, let's say, Estonia, which was one of the early countries, and there's I think there's hundreds of crypto asset firms there, as opposed to UK. There's lots of people who have applied, but there's only kind of 15 or so that have been granted. Some countries there aren't any. So I mean, what's the future hold for a more uniform dispersion of crypto firms across Europe? Do you think?
Yeah, I think that, yeah, so I'm certain there are jurisdictions with different sort of differences in terms of how rigorous, right, their standards may be. But I think, as when we look at sort of kind of different jurisdictions, the key is to take a longer term view as well, right? You might be a lot quicker, getting your registration, getting up and running in a jurisdiction with less rigorous standards, but kind of, getting that registration in a place like UK, for example, kind of sets the bar higher and is a good signal, I guess, to the industry and to customers or everybody else that you are here to work with the regulations to protect consumers in whatever it may be. So I think for me it's more about, I don't think there will be I wish one global uniform kind of standard or registration. There will always be some differences, maybe a bit more uniform with the EU, with MiCA, etc. coming up. But at the end of the day, there will always be some differences, but kind of as a business, the way we look at it is, it would be quite short-sighted to just, go in and do it just because it's quicker, whereas, going somewhere with maybe the bar might be higher, it sets you up for longer-term success.
Yeah, I think that's true, isn't it? It's, you want a more sustainable industry. I mean, Blair, one of the things that the FCA are very excited about in the UK is consumer protection.
Yes.
I mean, we've seen, London buses, covered in crypto adverts that then get taken off when the FCA get rather unhappy. I mean, as a registered firm now, I mean, have you had any liaison with the FCA about the consumer protection aspects and the whole kind of financial promotion regime, which is going to be coming into force at some point next year?
Yeah, look, and to take it back a step before I answer that, we're in constant liaison with all of our partners, banking partners, FCA, and all of that kind of good stuff. I think, further on to Sendi's point there, about the UK kind of landscape and the higher bar, I think, we talk about Gemini in particular. Gemini is founded on 4 kind of foundational pillars, which are compliance, licensing, security, and product. And with all of that in mind, so in every jurisdiction we go to, we have the seek permission, not forgiveness. And so moving to kind of the authorization process now, and you kind of references, there's 10 or 12, whatever it is now, and I think there are 200, 300 maybe firms that have gone through that process. I don't necessarily see only 12 firms getting through, and I know I kind of was flippant about the start. I don't see that necessarily as indicative of something bad on the FCA. I think it's actually a point at which we're in this crypto landscape now. It's we're 12 odd years old in terms of from Bitcoin's development. Firms need to get a little bit more serious about how they're engaging with the FCA and what regulators are expecting when they're looking to approve a firm. And we've gone through that process. We know what it's like with the trust license from the New York DFS. We've gone through a very lengthy process from the EMI perspective and the crypto asset perspective from the FCA. And I think a lot of firms are now kind of understanding what it really takes to get a license. The FCA are very clear, a license is a gift. and it's a privilege, and you need to kind of work to get that and build that kind of trust. With that in mind, on the other side of the fence, you also have to work really hard to retain it. And the FCA is very good, I think, about making their expectations very clear, and they go through, it's a very long and protracted process when you go through that application process. But after the event, it's kind of clear on you that you need to kind of, work with the regulator, but also do as much as you can to ensure that they don't have any concerns with you, so you don't have supervision or any of those other kind of instruments coming after you effectively. So from our perspective, consumer protection is a hallmark and a fundamental requirement for our business going forward. So that's why we've invested so heavily in compliance and financial crime detection to make sure that we, that the way when customers are coming into our platform, that they're secured in the best way possible. And we've also very, very, very recently signed up for the Take 5 to Stop Fraud campaign. We're the first crypto native firm to do that, and we're extremely proud and delighted to be part of that. And I think this is one of the things that, I talk about Gemini here, but broadly in the crypto landscape, we need to be conscious that crypto has a lot of great benefits and a lot of great components to it, but there are definitely bad actors in that space, and we have to be mindful that they're the ones that are eroding trust and eroding faith in crypto, and recognizing that our responsibility as a company in Gemini, we kind of embrace that with education through Cryptopedia and a variety of other different things. It's important about educating people that aren't as well versed in the security and the other components of crypto, so that they can come and enjoy it and not be, and not have their investments taken from them or anything kind of negative in that format. So it's a very long-winded way of saying consumer protection is a fundamental part of.
It's really important. Yeah. No, sounds good. Mary Beth, from the kind of point of view of the US in terms of the future, I mean, there are lots of regulators at state level and also federal level. I mean, is there any prospect of there ever being a kind of just one regulator for crypto, or is that unlikely?
Yeah, unfortunately, I think that's extremely unlikely, and we've been living with, in the U.S., the 50-state money transmission license system, which requires you to get a license in every state that requires one, or get a no-action letter. And this is really difficult when you are doing business within one country and you have to have 50 separate licenses to do business. And up until recently, a lot of the states didn't really have expertise in cryptocurrency. And so they were trying to figure out whether the crypto companies even fit within the statute. The DFS has been one of the more tough regulators in the US. But one of the things you have to say about the DFS, it was a rough start, trying to get the first couple of companies through and get licensed. But the goal that they have is actually not a bad one, which is the consumer protection piece. There are certain requirements that they have in place, whether it's having certain assets that have to be held, certain security measures that have to be demonstrated, governance, token approvals, and they're trying to get it right, and they are doing it in part, I think, because there isn't another federal regulator that's actually trying to look at the whole piece. In the U.S., if we're ever going to have a single regulator to regulate pieces of crypto, it's going to have to come from Congress, and Congress is going to have to say, here's your piece OCC, here's your piece SEC, and here's your piece CFTC, because they're not going to settle it themselves. And it really is going to take congressional action to do that. And it's important that we have it in the US, because for companies that are already there, I think they're going to stay and try to figure it out, deal with the uncertainty. But for companies who are not in the US, I think they're going to look to other jurisdictions that have figured it out, that have given a single monetary regulator and who have made some clear guidelines, and one that is open to answering questions. And until that happens in the US, I think we're going to see slower financial adoption because there's just too much uncertainty. And if that happens, the US may lose out to some of the other countries who really have worked hard to try to issue clear guidelines and clear regulation and keep an open door with the industry.
And if I may add, I think sometimes this discussion kind of almost becomes like kind of regulation and consumer protection or innovation. It's not really a either-or question. Really, you can have it all, and that's really the sort of I guess the art and science of the regulation, right? Again, we look at, I think Micah is a good example. I'm not going to claim that everything is perfect. It's very hard to do so, but you can have a holistic regulatory framework, which is done with partnership, as Mary Beth was explaining, in partnership with the industry, with consultations, taking into different considerations, and really being open to being educated and understanding the different players and perspectives, to have this holistic regulation that creates kind of sets out the rules of the road, which allows innovation to happen, still protects consumers, and still allows the companies to prosper who are trying to innovate and do something interesting and solve some of the real problems we have in the world today.
Yeah, and I completely agree with that. Maybe we can move on to the issue of stable coins, which is an ever more important part of the crypto ecosystem. I mean, you've got obviously institutional issued stablecoins, which are crypto asset tokens right now. You've got the thought about issue of kind of central bank issued currencies, maybe the kind of EU one, or I know the Treasury in the UK have thought about it as well. I mean, I think the Commission, the central bank in Frankfurt has as well. I mean, how do we feel about the equilibrium between the Circle coin, the tethers of this world versus the prospect of central bank issued stable coins? Have you got any thoughts, Sendi, on that?
Yeah, I mean, I think sort of if we kind of just, I mean, it's very hard to predict the future, but look at kind of the future, stable coins and CBDCs and crypto and various sorts of digital assets are kind of, where is it going and what it kind of almost like will look like, we don't particularly see the digital currencies completely supplanting fiat. I think it will be a world of a number of different digital assets and fiat sort of interplaying and coexisting for various different use cases. And I think here the role of the policy and regulation is to again create that environment where it gives basically choice to consumers and the businesses to use whichever one is best for whatever they're doing, while again, still providing the consumer protections. So I think in a world like that, what will increasingly gain more importance is interoperability, essentially. And that's one of the things we're heavily investing in at Ripple as well. We have created a private version of the XRP ledger, which allows central banks to kind of issue the CBDCs and manage them. And we see that the sort of digital asset XRP to act as a bridge currency to allow this interoperability and liquidity across all sorts of these kind of, let's say, digital assets and fiat across the world. So I think, again, I think the regulation policy should create that environment where all of these coexist and give people and businesses choice to use the right one for the right purpose.
And Mary Beth, there's been a lot of focus, certainly in terms of Tether and more recently Circle, actually, about really what supports these assets. I mean, what's the US approach right now? I mean, I did see that there was a subpoena recently issued to Circle. I'm not quite sure about what, but there was a subpoena issued. I mean, what's the US approach in terms of stablecoins right now, do you think?
Yeah, so in the US, they're concerned about, a couple of things. First, they want to know what is it, what are the assets that back the stablecoin? And then once they get comfortable with that, they want to make sure that the assets that back it are really there. I think that stable coins are going to go the way of the entire crypto industry. Remember at the beginning, everyone was afraid of it. What is it? It's just used by criminals. There's no good reason to have cryptocurrency. And the longer that we are here, the more responsible that the industry is. You see some of these same players who now want to figure out how can they play, how can they get on board. And stablecoins is a perfect example. They work, and they're great, particularly in certain jurisdictions where it's hard to get the financial banking rails to have these exchange. And so I think that some of the same governments who didn't want to trust the stable coins, I think we're going to see those governments coming forward and creating their own, because they're seeing by example, how well they really work. And as long as they truly are backed and the creator can show that it's there, then I think that stable coins are definitely here to stay, and we're probably going to see a lot more of them.
And Blair, I mean, you're an e-money firm, right? Gemini are an e-money firm in the UK. I mean, one of the takeaways from the kind of BICA and the UK consultation was that stablecoin issuers in the UK and Europe would probably need to be, at a minimum, have an e-money license and possibly even a banking license. I mean, what's Gemini's position on stablecoin issuance use?
Well, I mean, Gemini has a Gemini dollar, so that's issued out of the US. I mean, look, I think the whole stablecoin situation in the UK market in particular is still developing. I think it wasn't all of that long ago that the FCA kind of stated that it was probable that a stablecoin fitted under an e-money token, and they listed a whole bunch of different criteria that would mean that it may fall into that category, and they've since kind of retracted in it, and it's still kind of in the subject of further discussion. I think, to the broader point, to both Sendi and to Mary Beth's point, I think we definitely see a future for both CBDCs and company-issued stablecoins. I think it's pretty clear that there is value and there is interest out there. There's no single coin that is that is now dominant. USDC has risen enormously since its inception. Gemini dollar has grown enormously, and we're really proud about what that product looks like. And obviously Tether and other ones have been around for a little bit longer. I think the beauty of stablecoins such as Gemini dollar and others is about the barrier to entry component, about people that are in jurisdictions that are controlled by a fiscal policy that means that there's an erosion of value in their traditional currencies. So the ability to utilize stablecoins such as Gemini dollar, such as USD, such as whatever, that's, you can understand why there is enormous value globally. And with that in mind, I think looking at the FCA will develop their kind of their appetite on this further as they kind of bring in a more holistic legislation that covers kind of more components of crypto than just the 5MLD component, and seeing whether they can segment or kind of shoehorn things into the e-money licenses or whatever else. So as things that, so Gemini's approach is definitely that we see it all being able to marry and work together, and we're definitely happy to kind of see how it develops and let consumers drive the future of stablecoins.
Great. Yeah, excellent. We can carry on talking, or we can take some questions. I don't know if anyone's got any questions that they'd like to ask and get the combined wisdom of this panel. Lots of hands up. Excellent. Is there a mic somewhere knocking about? Great. Let's start with you, sir.
Thank you. Hi. Oh, to work again. I have a question about how regulation is going to impact the gaming industry as well. So we saw what happened with DeFi, having the word the word finance attracted the attention of the regulators a lot. And what is happening now with the gaming industry is that we're using the same technology where take like a staking protocol, where you put some token in, then you get the token plus X. And you have the same thing in the gaming now. So how do you think this will affect the gaming industry, and if the regulator is going to see the similarities and say that also those technologies need to be regulated?
Yeah, I think there are some equivalents between DeFi and I'm not intimately acquainted with the example that you give, but I mean, yeah, DeFi's under the radar becoming huge, right? I mean, there's billions of dollars in all these protocols, and I'm not sure people really know what to do about it. I mean, I've not really heard much from anyone about how they feel about DeFi. I mean, has anybody here heard any definitive positions from any regulator anywhere about it?
Well, there have been, I mean, the FATF has suggested that maybe the developers need to build in, to the protocol.
Other than AML, yeah, sure.
I think that the industry probably has to come up with a solution, not unlike the travel rule. Remember, a couple of years ago when FATF came out and said everyone has to comply with this, the industry's initial response is, we can't possibly do it. Like, it's not technically possible. But over time, when companies have come together and tried to figure it out, they've come up with good solutions, which is the better approach, to not have the regulators come in and set requirements that are just not achievable, and to let the industry try to come up with some solutions. And I hope that that's what happens in the DeFi space, because it's got limitless possibilities, and it should be allowed to continue and to innovate and to address concerns without regulators squashing it.
Yeah, I think further to that, I think there's two parts to your question there. There's the DeFi part, and then there's the gaming kind of component. So if we took the DeFi part further to Mary Beth's comments there, Gemini certainly acts as a gateway to DeFi, and we kind of embrace the space. And I think what we're definitely seeing is more interest in the DeFi providers working with us. And I know there's people have a particular view on the dichotomy there between centralized exchange like ourselves and the DeFi space, but we definitely see a balance there, and we're really excited about the opportunities that DeFi provides, and we'll continue to work in that space, but and see how it kind of further develops. But on the gaming side of things, understanding the legislative kind of viewpoints and the way that things have been developed from on the e-money, on the token side, and on the directive side, there have definitely been occasions where through dialogue with the regulators, that there has been, occasionally the gaming kind of component has been brought in under that umbrella without people understanding. Same with stored value cards or air miles or whatever else. And I think, what we're definitely seeing is the regulators kind of talking about legislation and directives that are going to kind of capture more on the gaming side. And I think I appreciate gaming in general, kind of certainly in the UK falls under the UK Gaming Commission, or UK Gaming Commission, whatever it's called these days.
That's right.
But I think the fact of the matter is that it is getting some of the the game issued tokens and whatever else are getting closer and closer to other tokens that have been regulated or overviewed by elsewhere. So it is going to be interesting to see how it develops, whether it stays standalone or whether it kind of eventually crosses into a path where it's all kind of under the same umbrella.
Cool, very good. Gentlemen, yes, you sir. And then we'll go over there. Just hold on.
Thanks. I think Sendi made the point earlier that it's obviously important to have a good interface between yourselves, and then on the regulatory side there needs to be a good dialogue. My question is, to what extent do you think there's an education gap or like an understanding gap between people like yourselves and then on the regulatory side? Mary Beth said earlier, the US, they're trying to figure out what is a stable coin. I know it's maybe slightly hyperbolic, but we're now talking about regulating gaming, DeFi. Is there a huge gap between people at the cutting edge and the regulatory side? And if so, what's the most pragmatic way to close that so you actually get something good from them?
Yeah.
Sendi.
Can I kick off?
Yeah.
Yeah, sure. So look, let's look at to answer that on one component. The FCA did a bit of research about, let's say, 6 months ago, and they claim about 2 million people in the UK hold crypto at any one stage, either now or have. So that leaves, what's the UK population, about 70 odd million? So that's 68 million people who either have no interest in crypto or are nervous or or they sit wherever they sit. So using that as a percentile, think about the FCA is a very large, looking at the FCA in particular, it's a very large organization. And I think it's fair to say that the level of understanding in the regulator will vary enormously. And so their crypto policy team, their crypto authorizations team, they'll have a very strong understanding of crypto, but there's a lot of other teams in that space in terms of people who are looking at marketing and financial promotions, that are looking at supervision. So to your point, certainly looking with the UK lens, I think the FCA and regulators in general are representative of society. I think it's really important that we kind of stand up, accept that we've got a responsibility to help them. help them understand it, because we're at the cutting edge of all of this. We're the ones kind of developing new products and new services and all of that good stuff, and they're the ones that are kind of reacting to it. And so to your point, 100%, we have a responsibility to educate in the clearest, safest, and best way possible to make it inclusive. And that's the thing. That's what I'm really passionate about, is making crypto available to everybody and making it understood by everybody. And if the more we focus on that as a key objective, the easier it will be for people to understand what the future case is.
Yeah, I want to agree with that. I think the regulators are trying to catch up, but think about what happens. You have regulators who get it, and then they go out and they join one of you, and so that knowledge doesn't always stay, with the regulator. So we have to keep in mind that, just because we went into the lab last year, it might be a whole new crew this year, and so you just have to keep going back and showing them, what is possible. So, because they really need to understand, how cool this innovation is, and want to learn more about it. And so unfortunately, you just have to keep doing it. And in the U.S., so many of the regulators are creating or have created, the fin hubs where they invite people in. And I think this is happening in other parts of the world too.
Yeah, I agree, certainly. I think there's a gap, but that is also not, in a way, surprising or unexpected. It happens, I think, with all the sort of new emerging technologies happening, right? There's always sort of regulation catches up once it's big enough. What has changed in the last 18 months, 2 years, right? Like crypto became a $2 trillion asset class, right? And all of a sudden there's a realization that it's not just a fad, it's not something just for criminals, like it's here to stay, it's a new technology, and it will underpin the financial and economic system. So I think with that realization and institutional investors coming in, etc., then regulators kind of start stepping a bit. I'm not saying they were interested in it before, but again, there's also a big variation, I think, across the world. How open, interested, how many years ago they started looking at it is a huge variation. And I think to the point that Meredith and Blair, it is a continuous education. I think it's not so much about, is there a gap? I think it's more about what is the approach and the attitude, right? I think we as an industry have to be very proactive and educating, and also listening, understanding concerns, but also the same from the regulator side. And I think that's why those public-private sort of partnerships and consultations and engaging in all of those are extremely important to close that gap, because it's not something you can just switch off. It has to be an ongoing process. And we see again, Ripple is obviously headquartered in the US. We have global operations, 9 offices around the world. A ton of our customers are in Europe and Asia. We see that difference across regulators every day.
Thank you for that. Question, you sir, there. A mic? Or you can just speak loudly.
So if you've got legal entities, you've got a software protocol company, DAO structure, and an asset management and treasury operation, what countries would you stick them in and why?
No,
just
I'm not sure we're in a position to be offering legal advice, sir.
Just out of interest. I mean, is there any countries you'd say steer away? Because it sounds like you're pretty negative on the US.
I'm not going to engage in recommending jurisdictions. I mean, I would urge you to ask legal advice as to what the place is. You can do anything, unless anyone wants to.
I'm drinking.
Yeah. Yeah. Not the Cayman. Next.
Hi. This question is for Blair. So once Gemini is, and it's FCA regulated, what is the impact it brings to the traders or the investors in tokens on your platform? The other question is, for new coins or tokens to be listed on your network, what is the impact? Do they have to go through extra process, or they can't? Does it allow non-UK residents not to invest in those tokens on your platform?
Well, look, Gemini is a global platform, so there are certainly some coins that, if we look at it broadly, there are some coins that are in the US, but not necessarily here. Like, for example, we don't offer Zcash in this in the UK. I think I won't necessarily get into the whole the way we evaluate the coins that go onto our platform, but it's reasonable to say that there is a different kind of level of criteria and process that goes through our evaluation process than, for example, some other exchanges that have a lot more coins than us, but at the same time, we still, when I joined at Gemini, we had 6, 7, 8 coins, and now I think we're kind of somewhere between 30 and 50. So it's developed enormously, and we've kind of moved away from derivatives of the of Bitcoin or forks of Bitcoin to a much broader ERC20 tokens, DeFi tokens, all of that kind of good stuff. So in the way that we evaluate our tokens is very much kind of in line with what our regulators for the New York DFS require of us, what the requirements are for the FCA as well. So there's a whole lot that goes into that, and I won't kind of get into all of that. But anybody that comes onto our platform and wants to, to put money into to buy a token or whatever, they can do that in whatever we offer in the different countries that we're in. So for the UK, as I say, we've got an enormous list of coins, and I would encourage you all to download the Gemini app right now and to feel free to
Cut.
Yeah, but in all seriousness, our platform is the same wherever you are in the world, wherever we can offer those services in the world. There's just certain coins that are available and some that aren't.
You've got one more question. I think I have one more question. I'm going to... you, sir. Sorry, guys.
Hi. Can you comment on the SEC Coinbase argument over stablecoins and lending and how that's a security?
That might have to be you, Mary Beth, I'm afraid.
I think that Coinbase has been trying to work with the SEC. 2 years ago, they helped organize a group of industry leaders to form the Crypto Rating Council, which put together a framework based on the Supreme Court's Howey test and other guidance by the Supreme Court by the SEC, and try to come up with ratings from 0 to 5 to, a 0 obviously being farthest from a security, 5 being a security. And the SEC hasn't adopted that, and they still, want companies to apply their own guidance and try to determine on their own whether something is a security or not. I feel like I'm not answering your question, so.
I think we're supposed to be finished at 1:45. There's supposed to be a little clock which is clicking down, but it's not working. So, are we done? 1 minute. One more question. Someone from the back. You sir, there. Gentleman. No more. We're done. Sorry. We're done. Sorry. 1 minute, we're over. Guys, thank you so much for listening to this session.